please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hard to find any green on the screen really. Any kind of pullback is being sold into as we speak. We're still hovering below that 9,800 mark. I repeat, we're below that 50 DMA. That's not good news. So technically weak as we speak. Well, let's try to squeeze in another query. We have Mr. Mittal, who writes to us from Haryana. He holds 400 shares of NTPC at 75 bucks since the last 12 years. Long-term investor, very long-term investor, in fact. Wants to know whether or not to hold on or to sell. Ashu, let's come across to you first. You know, a long-term investor. We have so many callers who call us and say, well, I'm not making any money. Here's someone who's making money on NTPC. Book out and get into something better or hold on?
Yes, I think currently probably it will hold down because of the government offer of 10% at 168 floor price. So I think it's been a laggard. I think for many years it has not moved. So it's only in the last few months where I've seen some kind of a movement. But I know these kind of PSU stocks at times are fancy for investors and they feel they are much safer to be in. But at the same time, unless you risk it or go into some high beta sector or stock, it is difficult to make money also. I mean, long term is something, on the contrary, long term one should get into a stock which could be multi-bagger. So I don't see NTPC by any standards any bagger even if you are holding for a long term. So I would suggest to move into some FMCG or probably some consumption story instead of NTPC. But as of now, I mean, it will hold. The downside is pegged as of now, I mean, this kind of a market. So we can hold for some time and probably in some up move can get out. But I don't expect much firework from NTPC, even if you're holding for a long term.
Okay, well, one more query. Ashish writes to us from New Delhi, 200 shares of DLF at 205 since 3 months. He's a medium-term investor. Wants to know whether to hold or sell. Rajat?
I see DLF moving up further, but at least the current scenario notwithstanding. This is a difficult scenario, no doubt, that stocks are getting weakened. But I would put a stop loss below 153 on the close and hold on to it because realty stocks are actually improving, and especially DLF would do well. If the horizon can be extended from 3 months to say 6 to 9 months, then I think he would make good money.
Okay, fair enough, gentlemen. We're going to leave it on that note. Thanks very much for joining in, taking us through all of those queries. And with that, it's also a wrap on the show. Do remember, you can keep sending us all of your queries. Closing bell is going to take the last hour of trade forward. As of now, the Nifty is sub 9,800. Also slipped below its 50-day moving average for today.
North Korea fired a missile, and that's what explains why the markets are under pressure in early trade.
Speaking to reporters, calling this an unprecedented move from North Korea. In fact, he said in Japanese that this was a new level of a threat.
This call that the founder, N.R. Narayanamurthy, will be holding with investors to address any kind of concerns that investors have.
As of now, there's a minor risk of Nifty having a second halt at the 20-day moving average of 99.25.
Today, if you look at most of these cases, the debt is more than the enterprise value. So unless we restructure the debt, then only some equity value can be created.
Well, there goes the bell, and it's 1/3% lower, 9,879 as we start.
Economy is slowing, tax collections going up means only one thing: money is moving out from consumers' pocket to government pocket. That's not good news for consumer industry.
We are sitting on finished and unsold inventory net of cost of about 14,500 crores. You know, as soon as that starts to sell out, this is a debt which will become zero.
Demand-driven base of FY17 second half, which will help the earnings to jump to an extent. So last year you did 7.5% kind of an earnings growth on Nifty. Maybe this year you will end at around 10-11%.
And he says that the forecast for good monsoon would continue until at least Wednesday, Thursday when it comes to Maharashtra and Gujarat.
The market is taking it on the chin. 110 points lost on the Nifty, 9,800 under threat.
Okay, it's raining in Mumbai, and actually it's raining cats and dogs. The market is also under the weather, and we have seen the Nifty now trading at the low point below the 9800 mark. And let's tell you what's happened today, because it's been a slow and steady grind through the day. Every incremental minor pullback is being sold into. It's not like one big decline that's taken place today. Slow and steady through the day. And stronger stocks like HDFC Twins have really led the market decline in today's trade. Also, what's interesting is that European markets and Dow futures are right now seeing sharp cuts. So that space is also not looking good. Mid caps have also seen huge reversals. So advanced decline at about 1:3 right now, with a lot of NBFCs at low point. How should you position yourself then in this kind of market? Let's go across to Ashwini Gujral and Mitesh Thakkar for closing strategies. Good afternoon, gentlemen. Ashwini, your thoughts on how trade has panned out so far, and whether in the last hour you would want to cover shorts or add into your short positions?
Well, we have fallen from significant zones. Now, so far it's been 97.50, 99.50, and 2 weeks we've spent in this range. So it's high time that we got out of this. So very good chance that 97.50 gets taken out this time. But it's news flow driven, and tomorrow something changes, some back channel, etc. starts working. But clearly the way we've come off from the highs, it looks like 50 holding up. As far as individual stocks are concerned, Edelweiss is a buy with a stop of 235, target of 252. Bharat Financial is a sell with a stop of 870, target of 835. And India Cement is a sell with a stop of 178, target of 166.
Hi, Ashwini. At what point would you turn a buyer positionally? On the Nifty, I mean.
See, if 97.50, 9700, this zone goes, then you are looking basically at 9500, 95.50 from where the July rally started. And it becomes a very good possibility that all global markets correct, and in that correction we also go there. So maybe 9500, 95.50 is the zone you look at once obviously we come out of this two-week consolidation.
Okay, Mitesh Thakkar is also with us. Mitesh, good afternoon. Your thoughts on what a bad day it's been for the bulls and your stock calls?
Yeah, good afternoon, Anuj. I think below 98.60 the selling has kind of really picked up. And as I said, I think that will mean that we should head towards the lower end of the range, 97.50-30. I think Ashwini has said as much. I think it's very clear that, that's been an area from where we have bounced back on the last 3 occasions. We have good intraday pivots over there, support ranges. But the structure on the medium-term chart is slowly weakening. So I think, if not this time again, I think, but possibly in the next few days, I would look at breaking of this range on the downside. So my idea is that if you've been short from 98.50-60 zones or 98.40 levels, which is what we have advised, I think hold on to those positions. If it breaks 97.30, then I think, shorts can be added. Else, I think, you would want to maybe tighten your stop loss as you get closer to 9750. For the time being, stocks which have broken down are good, offering good shorting opportunities. So I have 2 sell calls. Jet Air is a sell with a stop at 571 for targets of 520, and Marico appears to be turning on the downside as well. So sell with a stop at 318.5 for targets of 300.
Okay, Ashwini, getting back to your calls, it's interesting that you have a buy on Edelweiss and a sell on Bharat Financial. In general, NBFCs as a pocket, how would you approach?
Well, MFIs, I'm not very fond of. Probably Bharat Financial had some sort of deal news priced in. But those are the first places you look for buying. And they will not correct a whole lot. Things like Bajaj Finance or Bajaj Finserv or L&T Finance. So whenever the market turns, the turn will be sharpest out there. The falls will be much lower. So clearly, even they will correct. So once 97.50 gets taken out, you should expect correction on everything that's gone up recently.
Fair point. Let's do one thing. Time for our stock 360, where we look at a stock from all angles, including the fundamental and technical triggers. And the stock on our list today is Reliance Infra, still the top F&O gainer, though it's off the high point of the day. Anisha has all the details.
Well, yes, Anjal, I'll start with explaining the company a bit. It has three major divisions. If you look at the power space, infra as well as defense. The defense is one space that the company is betting big on. It hasn't really delivered as yet. Infrastructure includes your metro, your EPC business, etc. And also the road assets. They haven't actually done well for the company. They have been loss-making. And if you look at the power assets, they have a bit of generation capacity, around 980 megawatt. And they have the distribution, the Mumbai and Delhi distribution business, and some transmission assets into as well. But the biggest problem for the company is actually its debt. So if you look at the debt picture, that should come up for your screen. The debt is at around 29,000 odd crores as of March 17. The net debt to EBITDA is high at around 4 times. And even if you look at the interest coverage ratio as per Credit Suisse, the Q1 ICR in terms of EBIT was low at around 0.9 times. Even the interest coverage ratio, if you look at the last 10-11 quarters, has remained below the 1 mark. That is what CS has to say in terms of the EBIT terms, and that is actually a bit of problem for the company. Now, this is despite the several efforts that they've already made in terms to in order to bring down the debt. If you look at the cement business, they have sold off the cement business to Birla Corporation for an enterprise value of around 4,800 crores. Transmission assets, just this year they sold it to Adani Enterprises. That enterprise value was at around 2,000 odd crores. For the road business, they have been planning to get out in InvIT. They have got the approvals. We're just waiting for it to come by. That can also add around 2,500 crores in terms of their efforts to pare down the debt, because it still remains high. Now, what the reports really suggest today and why the stock is buzzing, that is because Greenvo is said to be in talks with the company to buy its Mumbai assets. Remember, it includes both generation as well as distribution. The enterprise value is pegged at around 10 to 13,000 odd crores. But remember, earlier as well, they had a talk with Pension Fund Canada and it did not go through. So if you look at the FY17 numbers, I'll just take 1 minute to run you through the details in terms of that. Mumbai division contributed around 2 to 2,500 odd crores in terms of EBITDA. In terms of overall scheme, it means that around 25% of the EBITDA was contributed by this business. If it happens at around 10,000 crores, it means that your finance cost will just go down by 1,000 crores versus your EBITDA. That will go down by 2.5 crores, and maybe that will impact the profitability a bit. So maybe one angle to look at, but overall getting down the debt is a positive thing, and the stock is reacting positively to that.
Okay, Anisha, thanks a lot for that. The stock may be reacting positively, not the market. And a lot of stocks are moving to the low point of the day. We just spoke about Bharat Financial. That stock has moved to low point. Repco Home is at low point. A lot of stocks at low point. SP Tulsian of sptulsian.com is also with us. Mr. Tulsian, good afternoon. We'll discuss all these stocks. But first, since we just discussed Stock 360, I wanted your thoughts on Reliance Infra. It's a company where a lot of people believe it has a lot of assets, but of course there's a debt problem as well. Would you use rallies to exit the stock, or do you see value in this stock?
See, Anuj, there are many companies, having a lot of assets, but what is the meaning if you have a lot of debts also? Now, if you come on the Reliance Infra, sometimes I'm unable to understand if the company is not able to monetize their pricey assets also, the kind of talks, which your colleague has just now presented, that these assets are actually the first attempt to monetize those with an earlier party has failed. And now again, I don't know for the reason of the stiff valuations, and in fact same thing is happening with the group, in the other companies also, where the monetization of the assets are not seen happening. In fact, if you take a call on the company, they have not been able to demonstrate any kind of monetization of a sizable nature. I'm not talking of a cement assets, which they have been able to. So if you keep delaying the kind of monetization of your projects, interest is seen piling up. You don't have any increase in the valuation of your assets. In fact, sometimes, or I would say that always or many times media is overestimating the valuations of the assets held by these companies. I'm not talking specifically in respect to Reliance Infra, maybe in case of other assets also, in case of Reliance Communication and all that, and the promoters are not able to monetize those kind of things, and interest is mounting up on the other hand. But now, if you really ask me, probably I feel that company has come to a dead end, where they just want to liquidate their properties and want to get rid of the assets. So there is no question of, if you don't have willingness to continue with your business, what is the point in taking a call on EBITDA or maybe the interest reduction and increase in the EBITDA kind of things. So because if you really see the core business of Reliance Infra, I don't think that EPC is their core business, because they sometimes announce that they won't be going ahead in those projects from here on. And if you really take a call on their power business, including distribution also, that is seen to be the cream or the pricey assets. And if that is getting delayed in monetization, I honestly, so all these trading bumps which we see on these kind of news getting floated in, that should be used as an exit opportunity from the stock.
Okay, well, that's the view on Rel Infra. In fact, that stock is actually the only one which is managing to hold up in a sea of red. It's up around 3-odd%. And if you look at all of the Nifty constituents right now, M&M is the only one which is just about managing to hold its head above the water. We have Dilip Bhatt joining in to talk about the markets as well. Dilip, hi, afternoon. Well, how are you approaching the weakness that we're seeing? And is the primary reason North Korea?
Well, I think we all know that we are a part of this global move that is happening. We are seeing the entire world markets also being down. And I think we are just seeing the global reflection over here in our local markets at the moment, without any doubt. And I think in a sense, this correction should be welcomed by everyone, because I think everybody was looking for an opportunity to buy at a proper time and at a proper levels. So maybe they will come sooner or later. But I think there's, having said that, I don't think that this is going to be a major concern as such. There is no doubt that the valuations are very much overstretched. There is simply no doubt on that. And we have seen that how downgrade in the Nifty EPS has come after the first quarterly results, especially if you consider that for the balance 3 quarters, and July also we know has been quite a washout for a lot of companies. The run rate in terms of the growth will be quite a bit, and as we move on to 3rd and 4th quarter, the asking rate will be quite a bit. So I think in that sense, the valuations appear to be overstretched, and we have seen constantly that the FIs have been selling and the domestic liquidity is supporting. So having said that, I think not a major concern at the moment. I think people and all of us will be looking for opportunities to buy at the lower levels. Maybe some 4-5% down. One should not be very surprised, and one should look for opportunities to buy over a period of next 12 to 15 months.
Okay, well, we've been updating about how actually there's no further sort of incremental decline, at least we're seeing for the markets. Anuj, I wanted to actually toss that to you. The mid-cap index is down 1%, Bank Nifty is down 1-odd%, but we're not sort of seeing a incremental weakness. We've stabilized sub 9,800 right now.
Yeah, but you know, this slow grind is a bit of a problem for me, Ekta, and you know, we've reversed all of yesterday's gains. Yeah. So, and it's an expiry week as well. So, I don't know. I mean, I think tonight's US market action would be really key, because you know, that market hasn't yet reacted to this global scenario. Curious that, you know, the European markets are down so much, while, you know, the Asian market didn't really have that kind of decline. So, I don't know. I mean, right now the market is going into trade of US market with a view that 130-140 points could go on the Dow futures, on the Dow Jones. That's what the market is pricing in, because Dow futures are down 130 points. If you have further fall in the US market, maybe tomorrow you have a bit more loss. But if things reverse, these things can reverse also very quickly, especially you know, when they emanate out of, you know, issues like North Korea. I've seen that in the past as well, and sometimes these are the best buying opportunities. But let's see. I mean, let's wait for market's verdict. As of now, I'm watching out for 96.80, which was the last low. Let's see if that holds or not.
Okay, well, as of now, we have definitely breached that 50-day moving average as well as the 20-day moving average, but nonetheless, 50 DMA of 9810, which we managed to breach in today's trading session on an intraday basis. But the other big story that we've been tracking this entire day has been what's happening with the monsoon and the rains. Remember, as the rains continue to lash the city of Mumbai, we have everybody, all of our reporters actually giving us live updates on what's happening. So let's go across now to Kevin Lee, who joins us from Bandra to give us a ground check on what exactly is taking place and whether there's any sort of respite now. Kevin, over to you.
Well, no sign of a respite. If you had asked me an hour ago, I think the rainfall had sort of mellowed down a little bit, but for now in the suburbs, back to a heavy downpour here. The traffic situation, however, is getting a little better. I'm standing in Bandra's Linking Road. Traffic here a little better. SV Road, I'm told, is still as bad. The Western Express Highway seems to have cleared up a little bit. The C-Link is fairly chock-a-block with traffic. On the Central Line, things are a lot worse. If you talk about areas like Kurla and Santa Cruz Chembur Link Road, those roads are still heavily waterlogged, so heavy traffic there. Speaking about trains, the Western Line, at least between Bandra to Matunga, things seem to be better. But apparently there's a lot of waterlogging between Dadar and Elphinstone Road stations. So between Dadar and Churchgate, basically trains running very late and very slowly, even those that are running. Speaking about the central line, trains from Kurla towards Kalyan, I'm told, are being cancelled. So the central line also hit pretty badly. High tide is expected somewhere between 4:30 and 4:50 p.m. So there's hope that there will be some respite in the hours to follow that. Back to you.
Okay, Kevin, thanks a lot for that. So those in Mumbai, stay safe. That's been the advice, of course. Stay at home unless it's absolutely urgent.
A lot of people are just going to be running home at 3:30 once the market's shut.
I don't know if a lot of people would have already gone home, Ekta. I don't know how we'll go home, by the way, because the entire area around our office has been flooded. And, as Kevin just told you, the trains are also slow between Dadar and Elphinstone. So that option is also ruled out, and Sea Link is also jammed. So, of course, let's see if things clear up. But for now, we'll do one thing. We'll take a break. But European markets are actually at 6-month low right now. And we have seen the euro also rising against the dollar for the first, above 1.20 for first time since 2015. Jonathan Schiesel of Ashburton will join in on the other side to talk about all these issues.
Well, a little bit of a clawback is what you can see for the Nifty at this point in time. Nothing to write home about. We're just about managing to claw back to 9,800. Remember, today's low was 9,783, so we're just about 10 to 15 odd points higher above that level at this point. Let's see whether we manage to sustain, whether we manage to build and at least claw back to 9,800 in terms of a close. But one of the primary reasons is what's happening in the global space. To talk more about it, we have Jonathan Schiesel of Ashburton joining in to track all of the global market cues for us. Jonathan, hi. Thanks very much for joining in this afternoon. Well, put things into perspective for us. How worried should we be of maybe the North Korean tensions escalating after the tests that we saw from them this morning?
It certainly doesn't help the situation. Obviously, we had a relatively quiet period following the words from the US president a few weeks back. They seem to want to ratchet it up again. Obviously, this isn't firing a missile over the Sea of Japan and over Japan. Has been done on a couple of occasions before. But clearly, it is ratcheting the tension up another level. For whatever reason. I imagine China and the US will be in deep discussions over this as we speak. I think it's always been a concern in the background. I think most rational people wouldn't expect it to come to anything, a conflict, but it is unfortunately sometimes difficult to predict what happens.
Okay. Jonathan, hi. Good to have you on the show. So, since you have been a long-term India bull, do you think this is a good buying opportunity to accumulate good stocks? Are you topping up on some of your best performing stocks?
Yeah, look, I think, in an ideal world, we'd like to see the index come back a little bit further. I guess the issue is some of the so-called quality stocks haven't derated a great deal. So it's not as if they've come off. Obviously, you get a headline index number, but then underneath that number, you're getting massive sectoral divergences. And the good quality names have held up remarkably well. So it's difficult to say whether they've come off. I think, sure, if we had some sort of proper global risk-off event, then yes, the market will come off full stop. And that, to our minds, would be a good buying opportunity.
Which are the sectors that you're finding most attractive at these levels?
Well, if I'm honest, it hasn't really changed over the last few months. It's difficult to find a great deal of, I guess, value stocks, like we were just talking about a few moments ago, in the quality space. So really, we've been doing quite a bit of work on some of the more cyclical stocks. It's a message we've been saying for some time. Those are probably the areas where you do see some value. But outside of that, it's difficult to find, if I'm honest.
Okay, so Jonathan, of course, your biggest bet, or the biggest money-making idea for you has been some of these stocks like Eicher Motors. Thoughts here, and thoughts maybe on stocks like Bajaj Finance as well, where we have seen new highs. Do you keep buying these stocks? Do you think these stocks can still be compounders from here on?
Our view is absolutely yes. I mean, something like Eicher Motors perhaps won't compound at the rates we've seen over the last few years, but certainly we still do see, phenomenal compounding opportunities, both in that stock and in multiple other stocks. I think when international investors look at India, what they do see is a whole plethora of potential compounders. And so the key question then comes is if you're more of a medium to longer term holder of a stock, you can benefit from that. But clearly, if it's in the short term, there could potentially be volatility from time to time. So the key is not to get sort of chased out of it. If you do find a stock that offers that compound return, the key is not to get chased out in a downward moment.
We have Mr. Murthy addressing a conference call this evening when it comes to Infosys. Most of the buy side is expected to log on. Will you be participating? Can we hear, I mean, what kind of concerns do you want assuaged from this conference call?
Yeah, I mean, I think it's been interesting to see the sell side certainly has clearly embraced his appointment, and we've seen a whole bunch of upgrades of the stocks following pretty heavy downgrades last week. So it has, there has been pretty much a 180-degree change, certainly from the sell side. I think the buy side probably was a bit more nuanced and probably didn't react quite so quickly. From our perspective, clearly, I think he's providing stability, which is certainly one big tick in the box. But obviously, we need to understand what happens with strategy and obviously, next appointment of a CEO. That's clearly going to be, I think, not quite such a difficult appointment to make with him in charge. So, I think a lot of the right noises have been made. Obviously, the stock reacted quite positively yesterday. I think, hopefully we'll see what further information comes. But the key thing from us is probably time. We don't need this to be a 6-month process. We need, if possible, some urgency in the whole process.
Yeah, but Jonathan, as an institutional investor, are you disappointed by the process in which things took shape in Infosys over the last 1 week or 10 days? Could things have been done in a better way?
I think undoubtedly. I think there is this impression that a lot of promoter businesses in India, there is an issue with promoters not going away quietly. And obviously we saw that with Tata more recently as well. Yeah, I think the trouble is washing dirty laundry or potential dirty laundry in the public space is not very helpful. But clearly we need to see what the facts are. But yeah, I think there's probably better ways to do it. But hopefully, if this company goes back to being a much more transparent organization, which they claim to be, then obviously that's anything that's obviously very, very positive news.
Okay. Jonathan, what's your sense in terms of what will probably happen if in case, and I'm getting back to the global markets, if in case there is an escalation, say if it comes to North Korea, one, do you expect a possible escalation? And two, if in case that does happen, would you readjust your assets at all?
Look, I mean, clearly, if there was something that happened in North Korea, it could be potentially devastating. Let's not beat around the bush there. The trouble is the options, I think, for the likes of the United States are very limited. Clearly, everybody knows that Seoul is only 30 kilometers away, roughly, from the border, and just using basic artillery, the North Koreans could flatten Seoul. There's no way that the US could deal with that problem quick enough. So I think there would be considerable resistance from the government in South Korea to any aggressive action. It's very difficult. The reality is there isn't much that can be done without avoiding massive loss of blood. So it's a very difficult situation. I think probably the time for action is long gone. But that doesn't necessarily mean that we'll hear more noise going forward, and it could potentially ratchet up a few more levels.
All right, Jonathan, always good talking to you. Thanks a lot for your time today. That's the view from Ashburton. They have been one of the longest India investors, of course, and have a lot of stocks which have done well for them, like Eicher Motors. But time to take up some of the queries that we are getting on Twitter using the hashtag AskCNBCTV18. The first one is from RB Singh, who has 100 shares of Syngene at an average price of 600 per share. Ashwini, thoughts on this one? Pharma in general has not done well, but Syngene?
It's probably done worse than Biocon. The 200-day moving average here is about 515. Now, When pharma will move up, I don't know. But he would be better off being with, private banks or NBFCs, etc.
Okay, well, let's get to another one. We have another Twitter user who's been holding 400 shares of Bajaj Hindustan since the past 3 years, wants to know when other sugar stocks will move up and should he sell or not. Ashwini, over to you.
Well, the problem here is, I think, debt. Otherwise, this one would have also moved. These are crazy things to do. You hold something for 3 years, keep on losing money, then expect, something goes up 3 times. Unlikely. Move on. If you still want to be with sugar, probably there are better stocks like Balrampur Chini, etc. But Bajaj Hindustan really hasn't performed in line.
Actually, Ms. Tulsian, I think that query was also for you because, you track sugar stocks. Your picks have been Balrampur Chini and Dalmia Bharat Sugar, also Triveni Engineering. What in particular is going wrong with Bajaj Hindustan, Ms. Tulsian? And if you would want to take the query from our border.
See, Anuj, if you first take a call on 3 or maybe our 4 prime picks, in the same pecking order, that is Dwarikesh Sugar, Triveni Engineering, Dalmia Sugar and Balrampur Chini. If you take a call on all 4, they all are having their presence in UP, then none of them are having any kind of long-term debt. They only have the short-term debt to finance the working capital. Maybe in case of Dalmia Bharat, they have a very small amount of about 300 crore. Rest all are virtually debt-free. If I just take the soft loan at 2 or 3%, whether in case of Balrampur Chini or Dwarikesh or Dalmia or maybe Triveni. Now coming specifically on Bajaj Hindustan, because they ventured into thermal power projects and the kind of debt they are carrying in their books is more than 5,000 crore. And the 5,000 crore debt, is not giving them any kind of return. And even in spite of being the largest sugar producer in the country, having produced about close to 1.5 crore bags of sugar, the entire, firstly because of the hard press in their working capital, they are not able to hold the sizable quantity, number one. Number two, the major portion of their profitability is eaten away by this debt of 5,000 crore. I'm not including the working capital debt of about 5,000 crore, which they've availed against the inventories. I'm just purely talking for the long-term debt other than the sugar business of about 4.5 to 5,000 crore. So that's the main reason, and I think that situation will continue to remain for the company maybe for next couple of years also when we see the positive uptrend seen continuing for the sugar cycle. So it is better to exit from the stock and move to Dwarikesh Sugar, which is our prime pick, or maybe followed by Triveni, Dalmia and Balrampur Chini.
Okay, let's do one thing. We'll take more queries later, but we'll address the story also flashing on the screen. But before that, Dilip, I wanted your thoughts on aviation stocks, Jet Airways in particular. How would you approach that stock from here on?
I think overall the aviation stocks still look pretty good. I think the measures the government is taking is really helping to increase the passenger load factor on an overall basis, and that too on a longer term basis. So even in a slack season, we are seeing that overall the growth has been pretty good. Coming to Jet Airways, I think this is a stock which still has a good amount of steam left, good amount of values to be unlocked in this. I think even from the current level, I think the stock looks pretty interesting. We would still buy for a reasonable bottom line growth of around 20-22% for next couple of years, assuming that the oil prices remain, more or less at this level. Even if they go up by another 10-15%, it wouldn't really impact them so much for the aviation industry as such. So Jet Airways is something which we will look very actively in terms of recommending.
Actually, we'll stay on. We have a story which is breaking right now. RBI sent a fresh list of defaulters to be taken to NCLT by banks. Lata is actually breaking that story. Lata, more details?
Yes, I mean, this time it looks like a longer list. It looks like it's going to be about 30-40 companies. I think Ritu Singh will be joining me shortly. She has some more names. It looks like the big names here are Videocon. Videocon Industries is IVRCL is another name that's in this list. Castex Technologies is there. So a couple of the steel companies, Jai Balaji Steel, Jaiswal Nico, Visa Steel, all big steel companies are there. And then you have Ruchi Soya, of course, that's been an NPA for quite some time now. Uttam Galva is in the list. So it looks like at least 40. See, we are getting to several banks, and therefore a consolidated number is difficult. But it does look like, I mean, I could count at least 25 in my name. Many of them are unlisted companies as well. Ritu also has a list of names which, oh yes, Ritu is with us. Ritu, go ahead.
Well, yes, SBI alone, for instance, we understand has a list of about 25, 26 accounts, and at least 10 more accounts we understand have been given to other banks as well, taking the total number to as many as 35 to 40 accounts. Some of the big ones that you've named already, they're listed ones. They're Videocon Industries, Uttam Galva, Visa Steel, you mentioned Monnet Power, which was not on the list earlier, Ruchi Soya, Orchid Chemicals, IVRCL. We also understand there are smaller companies like Shakti Bhog, Naga Arjun Oil, Jai Balaji Industries, Soma Enterprises, East Coast Energy, SEL Manufacturing that also feature on this list, which goes on to like many other smaller names as well that are not listed. But remember, what we understand from our sources is that this is not the list that is going to IBC under the IBC right away. What we understand is that because of the high provisioning concerns, what the RBI this time round has done really is asked the banks, given them time really till mid-December to resolve these accounts. If they fail to do so by that given timeline, they will be mandatorily asked to send this list to the NCLT and take the insolvency and bankruptcy route. But for now, they have been given time till December, so there's some, pressure off the banks, at least in the immediate term, as they deal with the other 12 cases as well. If they have been given the option, if they can resolve these accounts outside of the NCLT, then by all means go ahead and do that. But this is the definitive list of most of the large names that we've already gotten, and we will speak to more banks and get the other names for you as well.
Okay, so just an important clarification. So these companies do have time till up to mid-December in order to resolve the issues if they can. And if not, then it proceeds to the NCLT.
Yeah, actually, initially, this may even come as a relief because initially it was feared that practically all the companies up until, over 3,000 crores or so, if they are not resolved, will have to be taken. Now that one list is culled out, probably the indication to bankers is resolve this first. So we'll have to wait and see whether, therefore, what about those companies which are also in serious trouble, which are big accounts, but which are not in this list. And mind you, we have both reached out to some bankers and got some names. We don't have the exhaustive list. So is it 25? Is it 35? Is it 40? Is something we are still guessing. But the important point to note is that this is not being marched now. It is being marched to the NCLT by December. And this may also be a sensible ploy because there is only that much bandwidth in terms of NCLT benches and in terms of number of people who are ready to buy, number of IRPs who are ready to resolve these, to take over these companies, run them in the interregnum till a buyer is found. It's a long process. So perhaps it is getting spread out in a way to keep the heat on, but in a way not to clog the NCLT with too many cases. So that's very important to note that this is not going next week to the NCLT.
The banks had in fact made this request, as the second list was being worked out to the RBI because they're still dealing with those 12 large cases, which alone account for 25% of the system, and therefore, taking a huge provisioning hit on many other cases that were likely to come up would be a lot of pressure for the banks to take, and therefore this timeline of mid-December, we understand, has been given to the banks that this is the timeline within which you can even resort to finding some resolution for these accounts outside of the NCLT.
Okay, Ritu and Lata, thanks a lot for that. Now, from market's point of view, Uttam Galva, JP Associates, and maybe Ruchi Soya are the only ones which are anyway not dead stocks. Rest, all of them are dead stocks. But it will be important from banks' point of view. So a couple of banks are at the low point. Ms. Tulsian, your thoughts on the story that we are breaking right now?
Anuj, actually you need to analyze these all lists, very carefully. Take the case of Videocon Industries having a debt of 40,000 crore. I don't understand why this has not been taken or referred first in the first place of 12 accounts which has been identified by the Reserve Bank of India. Take the case of, since you have mentioned of Uttam Galva. Uttam Galva has a ArcelorMittal as a joint promoter in the company, and if you really take an exposure of about 5,000–6,000 crore, it's purely a converter. They buy HR coil, they make CR coil, they make GPGC, and they make color coated products. I don't know whether that company can really be salvaged, with a debt of about 5 to 6,000 crore. That clearly shows that the gold plating or the siphoning of the funds must have happened in spite of having the huge turnover which the company is posting of about 5,500 crore. Similar is the case with Castech Technology. I don't understand if the MTech Auto has already been referred in the first place. Castech, JMT Auto and Rolla 10 years. All three are the subsidiary of MTech Auto. And MTech Auto has a combined exposure of 15,000-16,000 crores. So even that should have gone along with that. And if you, apart from that, if you take a call on Monet Power, Jai Balaji, Visa Steel, they are all the steel stocks, and they are all tiny ones. Either they are converters, they don't have their own captive arrangements either of the coal or of the iron ore. So it's all, fragile kind of companies which are seen available. Maybe some kind of pressure tactics, as I've given the example of the Uttam Galwa. Maybe, I don't know whether ArcelorMittal can really afford to get the company go into the bankruptcy and, have the black spot on their name. So maybe just the pressure tactics, and let's hope it will be interesting to see that how resolution of first 12 accounts pans out. That will have its reflection on these accounts. And I don't think that that's the reason that the time of 31st December must have been given, or maybe up to March to all these 40 accounts. By then, the resolution of those 12 accounts will happen, and that will be giving a direction to these 40 accounts as well.
Okay, for now, the news has taken the market also closer to it's been at the low point. Couple of banking stocks also low for now. But we'll take a break on that note. Up next, we'll get you the BTSG calls.